Inflation protection. How to protect your wealth. Counter inflation and make profit. Bonus. Comparing Bitcoin and gold. Publisher KK. Author KK. Narrator KK. Inflation. Inflation explained simply. Mr. Meyer buys a pound of potatoes at the supermarket. The prices have once again gone up. At home, she learns that her hair salon and the gas station have also raised their prices. Her liability insurance company has also raised premiums. Everything is getting more expensive, she grumbles, with which Mrs. Meyer has already given a very good explanation of inflation. Because when not only the price of an individual product increases, but also the general price level, the overall cost of living for goods and services, then we speak of inflation. The word is derived from the Latin inflatio and means to inflate. In other words, money loses purchasing power. You get less for the same money. Is inflation dangerous? Even if just under 2%, inflation is not desirable. An inflation rate of 1.9% means that a price doubles in about 38 years. Anyone with financial assets should therefore always calculate with a sharp pen. After all, the interest rate on an investment must at least keep pace with the inflation rate. Otherwise, the same amount of money will buy fewer goods later on. This is also known as loss of purchasing power. In plain language, money is worth less. The same applies to wages and salaries. They, too, have to keep pace with general inflation. For many economists, therefore, the real development of purchasing power is more relevant than simply looking at absolute inflation figures. What is decisive for the citizen is what remains on the bottom line. Accordingly, an inflation rate of 4%, for example, is put into perspective of wages, salaries, pensions, or interest-bearing investments grow by 5% over the same period. It should be noted here that, however, that the general income level often lags behind the inflation trend. A retailer can raise prices quickly. Collective wage agreements, wage negotiations, or pension adjustments, on the other hand, are a lengthy and moreover political affair. Banks are also not exactly quick to adjust interest rates for the benefit of investors. It becomes dangerous when inflation rates become high to extreme, depending on the extent.
Sample complete. Ready to continue?